All right, stocks looking to 4 days of gains on hopes of a U.S.-China trade deal, but the dispute may be affecting many companies' bottom lines. We bring in Gus Scacco, the CEO of Hudson Valley Investment Advisors, as well as Jason Barsema, co-founder and president of Halo Investing. Gentlemen, good morning.
Good morning.
Gus, are you really optimistic here?
I think that we're getting back to, say, a normalcy here. We ended up selling off quite a bit because of the risk of interest rates as well as the China issues. And the China issues haven't gone away, and we're expecting that interest rates, are going to hold where they are. But you're looking at probably margins that are going to come in a little bit from record levels and sales that are going to come down or come in a little bit from also areas that we haven't seen in over a decade. So it's still strong, but not as strong as it was.
And Jason, the volatility still remains. What do you make of the volatility? And then also, have we found a bottom? When do you think the stock market will find a bottom if we haven't already?
Yeah, I mean, volatility is still here and it's going to remain while we have so many headlines still out on the table. As we just talked about with the China headlines, they still make me a little bit nervous, and the deal isn't done yet. And then, of course, you have Brexit, you have Draghi retiring at the end of the summer, and you have the debt ceiling and more macro risks throughout the year. I don't think we're going to find a bottom yet. It's too early. We're only 3.5 months off the high. Typically, these bottoming out processes take 8 months.
Gus, do you think, 8 months, so exactly, we're only 3.5 months in. So this continues, and it probably goes until that March 1st deadline when the 90-day trade truce with Washington and Beijing expires. Jason was talking about this just now, Gus. Well, do we get a deal? What does that deal look like? And how do we enforce that whatever China agrees to, that they actually adhere to what they promised? Does the exact nature of a deal that we get with China affect investing?
Yes, I believe it does. The thing that you have to keep in mind is it's one thing to say you're going to buy more cars, you're going to buy more farm products, but in terms of talking about the rules of the road, what you're not going to infringe on, the stealing or basically passing along of trade secrets or things of technology that are going to enhance your growth over a long period of time, those things take a lot of time to work out. It's not as simple as just saying I'm trading more. It's more or less, what are the rules? What are you going to adhere to? How can I test them? If we're looking at a Ronald Reagan saying it's trust but verify, those are the things what we're trying to do is come up with the verifications.
Yeah, and what if the administration, Jason, said this? Okay, thank you. We have a deal. You agreed to what we wanted you to, but we're going to keep the tariffs. And we're going to keep the tariffs on until you prove that you're following through.
Yeah, I think that you should always have the right to be able to put tariffs back on, right? Whether we completely lower the tariffs and then we wait to see if they prove and do what they say they're going to do, we should always have the right to be able to put tariffs back on. I think it'll be really interesting about IP protection and ultimately opening up the economy. Right. So I think that brokerages and financials will be really interesting to see how that plays out in China as they're potentially launching, the NASDAQ equivalent of Beijing. What type of access are our financial firms going to get and our insurance companies going to get within China? Is it going to be closed or is it going to be open?
Right. Domestic companies, the Russell 2000. Gus, it's looking good for a lot of folks right now. Q1 earnings growth is expected to be in the double digits for Russell 2000 companies, up 16%. Do you think that's already priced into the market? How are you feeling about the Russell?
Well, I think you've seen over the last couple of days companies coming clean and saying that we're going to end up having some issues in terms of where margins are at. Sales seems to be still robust, but they're down from, accentuatedly high levels. So we're still strong. We're seeing a little bit of a pullback in margins. And I know from talking to various companies, they're starting to see the flow through of costs, input costs going up. So right there, I don't think analysts, just like last year, analysts didn't anticipate the tax cuts and how robust it would be for margins. On the flip side, I think we're at a point where analysts have to compensate for the higher costs, the input costs that are going into a lot of the production.
All right, Gus and Jason, thank you guys so much for coming on this morning. And unfortunately, as we were doing this segment, futures have halved their gains, but we're still in the green. Have a good day, guys.
Bye.